Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. It is Thursday and another interesting day behind us. We had the Fed minutes at 2 o'clock. Definitely a bit of a weird day. You know, all morning long it felt as if the market was weak. You had high beta tech, out of play again for basically the second or third straight day, whereas the bid was in oil, and the bid was in oil names, and some of them now going further than people would have thought. So some people are starting the pain trade over there because they played a bounce, they sold it early, and now just trying to short them, and they're not going down. Spiders did clear the level that I've been focusing on, that 50-day moving average, and I figured if it cleared it, maybe there's a nice trade there, and we did get that trade. It was not the easiest thing to do, but if you were on the VTF, you watched me, I got long, and I was belly aching a little bit when we were dancing around the 200, but then they gave us a decent trade in the spiders from the 200 to almost 201.50. So anyway, let's just look at the landscape of the charts and see where we're at. You go to the chart first of the SPX, and it always looks easier after the fact, right? Everyone looked very easy here too when we broke down, when we were below all the moving averages and lost the 821 day and the 200 day, lost the channel. But what they do a few days before here, if you go here, it kind of made it look as if this little wedge was going to go to the upside, right before boom. So anyway, let's fast forward to where we are now, and you had the big move lower into your August 24th reactionary low, which was right here. Some people thought we would be getting a V, which we could have, right? Why is some of the lines coming in here? Hold on. Sorry, I'm a little tired today. Okay, some people thought, what did I just say? The V. Let's get back to the line. A little delirious too. It's been a long day, and it could have been a V like this, but you did get that, that topping tail right into resistance that created the W. Right? Everyone talked about the V and the W. Well, here was your retest of that low with the red dog reversal right there for adjustments. If you were short from this topping tail, maybe you covered here, or maybe even got long or covered here and got long on the Fed day when we didn't go down, when the news was pretty dovish and weaker. And if you didn't do it there, maybe here. And now all of a sudden we had another pivot. And that's all you could have as traders, is pivots to make decisions on. We held in the upper end of the range. I gave you guys the Fibonacci retracements the last few sessions where we didn't even pull back more than 20% or 25%, which means the move can happen fast. There's a lot of shorts caught, a lot of people who might have bought here, sold here, and pissed, or who knows what they're doing. So anyway, with that said, we pushed through the key level there, and your next new point of reference happens to be here, which was not too far away, right? That was 2020. So perhaps we push to retest the 200-day, because we're still below the 200-day. So sometimes you get a retest there, and who knows, if they push the envelope. On Bloomberg, I talked about 2020 to 2060 yesterday, that if oil kept its bid and we broke above, if we held 1970, which we did, we broke above 1999, that could be your next spot. And I guess if it gets there straight, it's going to have a lot less people on it, because it's probably going to be people being squeezed and mutual funds marking things up into October 31st, but it is what it is. The XLE, I put the chart on Twitter the other day, and basically has met pretty much all the targets, or at least this one. Okay, here was your double bottom on the XLE. This is when it engulfed this little range, gave you its heads-up igniting bar. You do not short an igniting bar, because if it sounds like what it is. It ignites a move, and you had a gap up that never got filled, showing power, and now look where we are. And I guess if you take a longer-term look here, it still, could make its way back to where it broke down from here, which would be higher, okay, which would still not even be at the 200-day, which comes up here. So with that being said, really big move. I was kidding when I kind of said this earlier in the week. I'm like, well, it looks like what happened here is you had this big move down in oil, right? Here was your break of the trend. Here was your head and shoulders top. Here's when it broke the 200-day. So everybody said, first quarter, I'm going to accumulate oil, okay, or oil stocks, right? They just came down from 104. And then it had a nice move. And then perhaps they bought a little bit more into the second quarter. And then when it broke this pivot here, they capitulated it out because they couldn't take the pain into the third quarter. And now all of a sudden we're in the fourth quarter, and people coming in there are getting the move that they kind of, actually this happened here. if you remember, this was decent, and then I remember that outside day here where it all changed, and then you could have drew your little ascending channel there. So anyway, there was a move, in the first quarter, which, was somewhat tradable, and then obviously boom, boom, boom if you didn't get out of the way, and now we're back pretty much at, I would say through resistance 1. Resistance 1 would have been here, so now they're already pressing into resistance 1.5, and then here's resistance 2, resistance 3. And that's basically where the bid was all day. And then if you look at oil itself, inventories were high yesterday. Even Dennis Garman said he liked it, and it stayed higher. So here was the channel broke above the channel here, and it seems like why can't it hit 1670 or 1742? If you look at where oil was the first quarter, also the first quarter, you had a rally up, and then you had this range here that wound up breaking to the downside. Well, everyone probably capitulated it out, and then look at that, igniting bar. That's what an igniting bar does. If an igniting bar, look at this move. This igniting bar pretty much took out this descending channel, gave you some power 3 days, showing you that it wasn't just a squeeze, and now you're getting some continuation higher, which I guess people want to see for emerging markets, for China. Maybe some of these oil names now won't have a debt crisis, which the bears wanted. So either way, that group has been leading, and the names that were stronger that we trade typically have been a little weaker, so you've had to switch some gears, switch some hats. Let's go through some of those names. Google, you look at it, and it might have been weak today, but in hindsight, all it did is really hold the 21-day, and it's still right near highs of the year. So maybe people just aren't in a rush until earnings. So, not falling apart. Amazon was a little weaker because of some news, but this too, didn't fall apart. Okay, gave a little bit of a reversal here too. Didn't lead the tape. We like when these things lead the tape, but still kind of in the game. Facebook shook the tree again for the 4th day, but wound up closing with a green candle. So maybe you bought the dip today. You did have a little bit of a red dog reversal. I did take this one just in case. This too still has one of the better setups, but some of the bean down names are the ones that have been giving you the the bang for the buck, like WYNN. Last Friday we were talking on the VTF. I didn't do it unfortunately, but most guys like Red Dog look at the igniting bar and WYNN, and I was like, ooh, looks good. And it was only up $3-4 after the unemployment, or whatever that number was, 140,000 jobs, and then now look at it. I know some people started shorting it here, okay, and I was like, be careful. Even in my morning call today, I was like, guys, be careful. This stock has been absolutely annihilated. It's still, you can't even see where it is down here. That's where it was. So you take this little spot here. This is where it was in 2014. It was as high as 250. Then it broke its key 200-day, which is where most smart guys get out, and that was still at a 200, and then this was another level it broke. So right now, if you take a close look at WYNN, okay, I know everybody now wants to short it because they feel like they sold it too early if they were playing a bounce, but all in all, this stock in August, okay, we're in October, so what is that, August, September, 3 months ago, was here, right? That was like 100. So if this stock was at 100 there, maybe it shouldn't have gotten all the way down here. And now it's cleared this resistance. So just be careful just trying to do a pain trade, because that's what's developing here. Everyone's trying to short it now because maybe you bought it here and you sold it into there, or you said it couldn't go above there. But meanwhile, it just took back where it was in September. And in August, it was hovering for a while, basing, for a bit above 100. So just be careful if that's all you want to do with this stock. And then Netflix was the star today. Netflix I tried early in the day, and it went and then it got very weak, and then all of a sudden the news that it's going to raise prices, which is the whole plan Netflix had. If you come to me, Netflix basically wanted to get everyone in the world on it. Remember when they reduced, or they gave it away for free or something like that, and then like, okay, we're going to get everyone to love it, and then we're going to start raising rates, and that's when our margins are going to get better, and that's when we're going to make a hell of a lot of money. It's only $1 that they raised it. They could definitely do that a few times. But anyway, more importantly, you look at the chart. It took out this area, came back above, closed really strong. The pivot that we went over in the morning call was 112. You also had a pivot here above yesterday's high at 1 what is this, 109.78, so 2 spots to buy it, and if anything is going to have some follow through tomorrow, let's hope it's Netflix. I did take this one home also. You go to insert study, okay, let's see if I learned how to do this well. Volume, because volume is very important if you want to take something home that's strong, and did I do it wrong? Where is the volume? Okay, I screwed that up. Let's try and do it one more time. Let's go insert study. Volume, oh, volume. There we go. Apply. Okay, look at the size of the volume. That's a lot of volume. So volume, close on highs. Good book says take it home, just like you hit or double down on an 11 versus 6 in blackjack. You don't know if you're going to get a 10 or a face card, but the high percentage trade is if you have an 11 versus 6 in blackjack, you know what? You double down for a 10. So the same way, you know, a stock clears a pivot. You have a nice above moving averages on volume. You know, that should be a take home. We'll see. Remember when I showed you the volume on Twitter in the recap? I don't remember what day that was, but I think it was right here. Remember I showed you this 2-day move? Okay, I'm like, oh, Twitter woke up, 2-day move, first time in a while, held there, and then hit as high as 31.50, which was one of our targets, actually 31.80. But anyway. So look at the volume. The first time volume came in was right here, and then boom. So now we'll see, you know, what happens next. It could pull back a little bit. I think the options guys want to have it at 30. You know, they baited every chaser in to buy the 30, 32, 33 calls. So now maybe, you know, in the afternoon it got a little weaker. So we'll see if you sold some strength in Twitter today. Perhaps we could be buying it back somewhere into here. Okay, which would be good, right? From here. There you sell, here you buy back, right? Sell rips, buy dips. I've heard that once or twice. But anyway, lots of volume. So it's back in play. It's good when Twitter's in play because Twitter, you know, you could get a lot of size. It's pretty thick, but it also moves, you know, when it trades with patterns and pushes through areas. So, you know, at this point, I don't have Twitter overnight. You know, I did have it the past few days, and I sold it a little early today, but you know, I held on and it was decent, and you know, north of 30. I didn't think we'd get to 31 and change today. What else happened today? Oh, guys are asking me about some good-looking charts. So if you want to see some decent charts, SBUX. That's a good chart. SBUX is trying to break out. You know, if you want to look for stocks that could be breaking out above the moving averages, SBUX, a better one. Nike also hasn't, you know, had a big earnings. It's been consolidating. You know, if you're looking for a leader, well, Nike seems like it could be a candidate to break out if this market stays strong, which it's trying to be. So that looks good. What's Under Armour doing? Under Armour, you know, a little bit harder to deal with, but this too, you know, broke down, regrouped, and now has a bit of, you know, a wedge type pattern here. So that's something to keep an eye on for it to break above there. You know, the banks have been weaker. You know, it looks like we're not going to be raising rates for a long time, but they were all lower, but they did not fall apart. So make sure that like something like Goldman Sachs stays above this. And if it does, maybe, you know, there's another trade at some particular point moving forward. Let me remove something. Remove the volume. Whatever. Okay, because now, you know, things look a little different. It's harder to see, but hung in there. Apple, everyone's been asking me. Apple, I didn't even trade once today. It's been weaker. I don't know why. It could be because there's no buyback. It could be because the 6S is not really selling because I don't know one person who bought it. Anyone that has a 6 already, which was a blockbuster, you know, this is the 6, right? This is the 6. Everyone bought the 6 in the last year. So why would people leave the 6 to go to the 6S? Maybe they would go from the 5 if they still have it to a 6S, but if they didn't rush for the 6, they're not rushing for the 6S. So I have a feeling the street sense is that, you know, it's not going to be a barn burner quarter for the iPhone 6S. So maybe that's why it's been out of play. But anyway, you look at the chart. You know, it's holding this spot here, but definitely very vulnerable. I don't know if it's going to break it because of option expiration tomorrow, but, you know, this could be something to watch. You have 107.31 is pretty big support. You know, here's your, you know, micro resistance around 112.40. The longer it stays in this end of this little channel here below the 200-day, the higher the probabilities it might go below there. You know, some are continue to point that. Excuse me, this you know, potential head and shoulders top on the weekly. I have like a little cotton in my mouth, so that's what this is. And the right shoulder happens to be below the 200-day, which is never good. So if they don't have a blockbuster or a really good report, chances are this could see more downside, and that wouldn't be good for technology or the market. So before my eyes tear and I can't talk anymore because I feel like, I got something in here. Do I have any water? Water, please? No, I don't have. See, I don't even have a staff. I have no teleprompter. I have no staff in here. It's just all, off the cuff because I'm trading all day. So I get to see stocks all day and I get to look at the action. And then every now and then I can do my tweets. And then at lunchtime I'm at the gym after writing my note in the morning and doing the morning call with Amelia. So power packed days. So I hope you had a good week. Markets are overbought. The oscillator I think was plus 57, which is definitely a spot where you shouldn't be. Maybe adding on indices, but you look at the oscillator so high, but then you look around, the IBBs aren't overbought, right? The IBBs are just, hanging out here, right? Definitely one of the weaker sectors, but hanging out here. This isn't overbought. So if money all of a sudden left oil and came back here, this could bounce. The Qs aren't really overbought. All that happened is you had a really big move, from last week. And what has it done for 4 days? For 4 days, it's been weaker and then comes back up and it's holding this area. So if the Qs wanted to make another move, they could. It's really all the oil names, oil itself, and the casinos and the materials and all the laggards that just pop back where people are looking to, catch up on some returns while the leaders that still technically look okay are just building patterns that at some point might get us a better trade. I will be in Short Hills tomorrow. There'll be no morning call by me. I hope everyone has a nice Thursday evening. Go out for happy hour, have some fun, and, with your family or with your friends or with whomever. And we'll be at it again tomorrow. I'll see you then, and keep your head high.